Forex trader, Australian US dollar currency pair, trading discussion. Forex trader, Australian US dollar currency pair, trading discussion. In this tutorial, I want to share with traders all one need to know and understand to trade the Australian dollar, US dollar currency pair like an expert or a professional trader. We will discuss market indicators that move the Australian dollar, US dollar currency pair. And we will also give to traders more Forex trading tips for trading, the Australian US dollar currency pair. Let's get started. All right. So what are the market indicators that move the Australian dollar, the Australian US dollar currency pair? All right. When we are talking about the Australian US dollar currency pair, we are comparing the economy of the Australia to the economy of the United States. So if the economy of the Australian economy is booming or is doing very well, but the economy in the United States is not doing very well, there is a high chance that the Australian US dollar currency pair will go up. So the Australian dollar will be appreciating or strengthening against the US dollar. On the other hand, if the US economy is doing better than the economy of the Australia, then the US dollar will be strengthening against the Australian dollar. If the US dollar is strengthening against the Australian dollar, the Australian dollar US dollar, the Australian US dollar currency pair will go down. Okay, it makes sense? We are comparing two countries. Okay, so the number one market indicator for trading the Australian dollar US dollar currency pair, okay, one should understand that the economy of the United States or the economy of the Australian economy will influence this currency pair, okay? However, I want to share with traders the number one factor that will influence this currency pair, okay? The number one factor that will influence this currency pair is what? The central bank decision, either by the United States or the Bank of Australia, will influence this currency pair. So if, for instance, the US Federal Reserve is devaluing the dollar, there is a high chance that the Australian dollar will go, the Australian dollar US dollar will go up. Okay? But traders must understand something very important here, is that the decision that are made by the US Federal Reserve is superior to the decision that are made by the Australian, Central Bank. All right? So we can see that from 2008 to 2011, United States, what was happening is that the US Federal Reserve was devaluing, the dollar, the US dollar. Now, when we are talking about the US economy, we usually use the US economy to represent the global economy. So when the US economy is doing very well, very often, major market participants will say that the global economy is doing very well. So understand that when we are saying the US economy is a kind of a proxy for the global economy. It reflects the global economy. So that's why I say to you, decisions that are made by the US Federal Reserve, are more important than the decisions that are made by the Australian Central Bank, the Bank of, Australia. Does it make sense? All right. So we need to watch first what is happening in the United States. All right. That will determine the pattern of the Australian dollar US dollar currency pair. okay? If nothing is happening in the United States, and the Bank of Australia is making a decision that will influence this currency pair. So before we look at the central bank in Australia, we must first check what the US Federal Reserve is doing. All right, it makes sense? So you want to know first? Okay, so here we are. Let me draw something here. This is for new traders. If you're an advanced trader, you may understand this, but I invite you to stay with us because there are more we're going to discuss in this video. So stay tuned and watch the full length of this video. So suppose I'm calling this one now. I'm going to color this one now in orange. This is the economy in Australia, okay, and the green one, this is color in blue, okay, to represent the economy in United States, okay, pay attention carefully, all right. So the blue represents the US dollar and the orange represents what? The Australian dollar, okay. We are comparing two countries and two economies. One economy is more important than the other. So the economy in the United States is very, very important. In fact, it's representing the global economy. So when the economy of the United States is doing very well, we say that the global economy is doing very well. So you can see that from 2008 to 2000, okay, from 2007 in fact, to 2009, the US economy was in recession, okay? So was bearish. So we will say that the global economy is bearish because the US economy is representing, okay, the global economy, all right? But here we have also a central bank, the Bank of Australia, all right? So the Bank of Australia will make decisions, the central bank in Australia will make decisions that will affect the economy right here. But we have also the US Federal Reserve that will make decisions here. But when the US Federal Reserve is making a decision here, okay, that decision will influence what the central bank in Australia will do. Now, the central bank in Australia will always make decisions paying attention to what is happening here in the United States. That's why I say to you, the decisions that are made by the US Central Bank, the US Federal Reserve, is more important than the decisions that are made by the Bank of Australia. Okay? All right? It doesn't mean that the decisions that are made by the Bank of Australia are not influencing the economy, but all decisions that are made by the Bank of Australia are indirectly connected by what is happening in the United States. Therefore, if one is analyzing what is happening here in Australia, one must keep, okay, eyes on what is happening in the United States because the United States economy is a bigger economy that will influence the Australian economy. Does it make sense? So the number one factor that will influence the Australian dollar US dollar currency pair is the US Federal Reserve. The US Federal Reserve is the number one factor. Decisions that are made by the US interest rate, decisions that are made by the US Federal Reserve will influence this currency pair. Though the decisions that are made by the Australian Central Bank will also influence this pair, these decisions are indirectly connected to what is happening in the United States. All right? Let me give you some example here. You can see that from 2008 to 2011, the US Federal Reserve was busy, okay, devaluing, okay, the dollar. So there is outflow of the dollar, outflow of capital flight from the United States to other parts of the world. So the central bank in Australia is aware that there is a devaluation taking place here, that investors would like to bring their money out of the United States. So therefore, they start putting up interest rate in Australia. So because the US Central Bank was devaluing the yen, the dollar, the US dollar, it makes more sense that the central bank in Australia put up interest rate because they want to bring all this capital coming out of the United States into Australia. Now, you have to understand a decision that are made by the Bank of Australia was influenced by what is happening here in the United States. So the number one factor that is influencing this currency pair is the U.S. Federal Reserve decisions. It makes sense? All right. So from 2008 to 2012, devaluation is taking place in the United States. So investors or wealth managers want to bring their money out of the United States to other parts of the world where the interest is higher. Therefore, this central bank in Australia decided to put up interest rate, making it more appealing for wealth managers to bring their money into Australia. Okay? So this is one of the factors that will influence this currency pair. So if you are trading the Australian dollar, US dollar currency pair, one must pay attention to the US Federal Reserve before paying attention to the Australian Central Bank. As I explained to traders before, the Australian dollar, US dollar currency pair is also influenced by gold. So if gold is going up, the Australian dollar currency, the Australian dollar, US dollar currency pair will go up. If gold is going down, this currency pair will go down. It's positively correlated to gold. All right? The Australian dollar, US dollar currency pair is also positively correlated to the euro dollar currency pair. So we know that the euro dollar currency pair is the leading currency pair. What we are talking about here, we are talking about correlation between currency pairs. Okay? So the Australian dollar, US dollar currency pair is positively correlated to gold and also to the euro dollar currency pair. So if the euro dollar currency pair is going up, there is a high chance that this pair also will go up. If the euro dollar is going down, there is a high chance that this pair may go down. All right? Remember that there are some times where there may be a divergence, but very often these two pairs will go in the same direction. The Australian dollar, US dollar currency pair and the euro dollar currency pair. Okay? It makes sense? So you want to understand the factors or the market indicator that move the Australian US dollar currency pair. Okay, so we are talking first about the U.S. Federal Reserve and also the central bank in Australia. Okay, I already explained that to you. The next thing that we need to pay attention to is gold. Gold is a market indicator for the Australian dollar, US dollar currency pair. Okay, the Australian US dollar currency pair is positively correlated to the euro dollar and also to gold. So the strategy that Forex traders are using is that when they receive a bullish signal for the euro dollar, okay, then they will check the Australian dollar, okay, and if they receive this bullish signal also, they will take it together with the euro dollar currency pair. But for instance, if the euro dollar gives a sell signal, but the Australian dollar, US dollar currency pair give a bullish signal, trader will be a little bit careful because they know that the euro dollar is likely to go down. They will prefer to sell the Australian dollar, US dollar currency pair at the same time that they are selling the euro dollar currency pair because very often, not always, these two pairs will go in the same direction. So one of the challenges that a lot of for new Forex traders face is that they will, for instance, they will start traders that are using the TSCW24. If they do not understand the correlation between currency pair, they may go now and see a sell signal for the Australian dollar, US dollar currency pair. But if the euro dollar is bullish, you will see that slowly but gradually the Australian dollar will start going up. Okay, will start following. Okay, the euro dollar currency pair. Okay, like a little dog, so to speak. It makes sense? So there is a positive correlation between gold and the Australian US dollar currency pair, positive correlation between the Australian US dollar currency pair and the euro dollar currency pair. These are the market indicators that move, okay, the Australian dollar US dollar currency pair. It makes sense? It's also a powerful. The next thing that trader must understand, okay, talking about all one needs to know and understand to trade the Australian dollar, US dollar currency pair like an expert or a professional trader, all right? We need to understand that If the global market is in recession, pay attention carefully. If the global market is in recession, there is a high chance that the Australian dollar, US dollar currency pair will go up. So when we are in a recession, when the global economy is doing poorly, there is a high chance that the Australian dollar, US dollar currency pair will go up. Because during a recession period, there is a transfer of, a fiat money, currencies into real asset like commodity. So what is happening, people know that, the money that they have in their pocket is losing value, so they buy gold, they buy, real asset to secure the value of their money, all right? So when we are in recession, when the economy is doing so poorly, you are likely to see that the Australian dollar will be strengthening against the dollar. If the global economy, we say to you that the US economy will represent the global economy. So when the global economy is doing so poorly, you are likely to see that the Australian dollar, US dollar currency pair will go up. As you can see, from 2007 to 2008, the global economy was in recession. And from 2009 to 2011, it was still in recession. When the Federal Reserve was busy printing the dollar, you can see that the Australian dollar, US dollar currency pair was going up from 2009, 2010, 2011, was bullish because the global economy, the US economy was in recession. The Australian dollar was strengthening because of a capital flight from the United States into the Australia, policy by the US Federal Reserve devaluing the dollar, outflow of capital into the Australian economy. The central bank in Australia economy, the Australian central bank start putting up interest rate because of what is happening in the United States to attract, funds into their country, all right? Market was in recession. This pair, this Australian US dollar currency pair was going up. If the global economy is recovering or is doing very well, is no more bearish, you are likely to see the Australian US dollar currency pair going down. As you can see here on this chart from 2012, as the Federal Reserve said to the market that we are now stopping the quantitative easing. We have stopped, printing the dollar. We are now ready to put up interest rate, a change of policy. So there is a change of policy by the US Federal Reserve, here, all right? They say that they are not putting up interest rate yet, but they say to the market, we are not cutting interest rate anymore. We have stopped this policy of devaluing the dollar. We are now ready to start putting up interest rate, which means we are now ready to return all the money or the fund that went out. We are now ready to receive them back. So a change of policy taking place, United States, reflecting the recovery that is taking place in the global economy, all right? Employment start improving, job creation, United States start improving, all right? There are more job creation, unemployment start going down. Federal Reserve alert the market saying that, we're now stopping our quantitative easing, We are now ready to start putting up interest rates. If the economy continues to do very well, we are likely to put up interest rates. So the global economy or the US economy start recovering. As you can see, the Australian dollar, US dollar currency pair is going down. You may say to me, George, I'm a day trader, I'm a swing trader, I don't need to know all this. But why do you need to know? You need to know because as a day trader or swing trader, all right, you want to know the long-term trend. So you may trade, day trade, swing trade in a direction of the long-term trend. So the change of policy that was taking place in 2012 is alerting the market that this currency pair is likely to go down. So while as a swing trader or day trader, we will give priority to sell signal from 2000. You see here from 2008 to 2011, we give priority to bullish signal because of the policy of the US Federal Reserve and the consequence of that policy in Australia. All right, so you need to know what is the long-term trend and where we are. As the price going down, the price does not go up forever. So it went up for how many years? 1, 2, 3. All right. So then we have a 2 doji here, talking about candlestick pattern. Then now it's going down 1, 2, 3. So it went up 1, 2, 3, forming a doji. Now we go after 2 doji here. We get 1, 2, 3. So we are now at a critical level. It's not going to go down as it was going down as much it did here in 2013. So we are now at a critical level. We need to watch this support level at 78% Fibonacci retracement level, talking about okay, the range from the low of 2009 to the high of 2011. I'll come back to that very soon. It makes sense? So talking about all one need to know and understand to trade the Australian US dollar currency pair like an expert or a professional trader, we are discussing market indicators that can move the Australian US dollar currency pair. The number one market indicator is the US Federal Reserve policy that will influence decisions that are made by the Australian Central Bank, all right? As I explained to you already, I don't want to repeat myself again, all right? This is very, very important for traders to understand. If gold is going up, the Australian US dollar currency pair is likely to go up with gold. If gold is going down, the Australian US dollar currency pair is likely to go down. It's positively correlated to gold, all right? And you want to understand why. Because if there's a recession, wealth managers transfer cash into real assets to protect, okay, the value of the money that in their bank, okay? So the money, the real value, the purchasing power of the currency is going down if we are in recession. Therefore, we need to transfer the intrinsic value of the cash that we have in the bank into real asset as commodity. So what I need to mention to traders here, the Australian dollar US dollar currency pair is a commodity currency pair. So when we are in recession, all right, so if you are an investor, you need to understand this. When we are in recession, it's better to invest in commodity, all right? So there is a transfer of cash into real asset. Gold, number one commodity. We are in recession, gold has a high chance to go up. So as you can see from 2009 to 2011, okay, the Australian dollar US dollar currency pair was going up. At the same time, gold was going up. Why gold was going up? Because real cash has been transferred into real asset. In this case, the real asset is gold. So in recession, we transfer cash from the bank to buy gold to protect the value of the cash, to protect the purchasing power of the money, all right, by buying gold, all right. So in recession, gold is going up because the Australian dollar US dollar currency pair is a commodity currency pair. As gold is going up, as all the commodity market is booming during the recession period, you are likely to see this commodity currency pair, in this case the Australian dollar US dollar currency pair, also going up. If the economy, the global economy, which is reflected by the US economy, is recovering, we are likely to see this commodity currency pair, the Australian US dollar currency pair, going down, as you can see on this chart. As a day trader, swing trader, we must give priority to such signal in the direction of the long-term trend, paying attention to what is happening, talking about the Federal Reserve, a market indicator for the Australian US dollar currency pair, okay? Gold, okay? We also know that the euro dollar currency pair is the leading currency pair. We must align each signal. So if I receive a sell signal for the Australian dollar US dollar currency pair using the TS MACD Pro, all right, I receive a sell setup for this pair, but the euro dollar give me a bullish setup, I need to be careful. Doesn't mean that it will not work, but I see a divergent signal for two things that normally goes in the same direction. So if I'm selling the Australian dollar US dollar, when the euro gives me a bullish signal, it may work, but I need to be cautious and know that there is a little bit of risk in this trade. All right? So I want to use a tiny stop loss. I want to control the risk. I want to keep my eye wide open without blinking, monitoring the trade, because I know that there is a little bit of risk. All right? If I receive, okay, an identical signal for the euro dollar and the Australian dollar US dollar currency pair, I'm happy to trade it, but I want to take this signal on or near key levels. It makes sense? It is very important. So the purpose of this video is to show traders how the professionals are trading the Australian dollar, US dollar currency pair. What are the market indicators that are influencing the Australian US dollar currency pair? What are the things that we need to know in order to make better trading and investment decisions? So we know that the US Federal Reserve will influence this currency pair, gold will influence this currency pair, and the euro dollar will influence this currency pair. These are the market indicators that move the Australia US dollar currency pair. There is another factor that can also influence the Australia US dollar currency pair. In this case, we are talking about the China economy. Pay attention, my friend. All right, pay attention carefully. Because if you want to trade Forex, you want to understand this thing so you can make consistent winning trade. When one is trading Forex, okay, it's not all about technical analysis. It's about understanding, okay, the hidden market indicators that are propelling, okay, the Forex market. All right. So very often traders will use technical trading tool. All right. Trading systems, okay, technical indicator, MACD, stochastic, RSI to make that decision. They can use also trend line or resistance level to trade. This is about technical analysis. But apart from the technical analysis, one must also understand the market indicators that are moving the currency pairs. Okay, so once we understand, okay, the characteristic of the financial instrument that we are trading, okay, the market indicator that are influencing, okay, the currency pair that we are trading, we are likely to make better decisions. So we may see a sell signal and know that, okay, assess the setup and say, no, I will not sell. Why I should not sell? I don't want to take this sell signal because it can fail. Because the long-term trend is bullish. The Federal Reserve is busy devaluing the dollar, okay, from 2009 to 2011, all right? They're still doing it, okay? So I would prefer, if I want to sell this, I may stay away from that signal. I prefer to buy. I want to buy on the edge. This will allow me to minimize losses and to minimize risk. Okay, 2012, the Federal Reserve changed their policy. I know what is influencing this Australia US dollar currency pair. I know that this time I must only focus on what? Sell signal. So if I receive a bullish signal, I know that it's a contra trend. I need to handle it carefully. You see now? So by knowing the risky trade, by knowing the potential risk, we are likely to make better decisions. Now, what is happening? So what I have noticed, a lot of traders can trade. They can trade. Why? They can trade when we have an orderly market, okay? So things are perfectly okay, all right, technically speaking, and they can trade. They can make money from the opening bell to the closing bell. Now, sometimes we don't have a normal market. We don't have an orderly market. Things are a little bit messy, okay? So we need to now go deeper and know, okay, the market stable data that can govern, okay, our trade. So when we know them, we pay attention to them, and we can carefully navigate through, okay, the Forex market. We can develop, okay, the mindset of professional Forex traders. All right, it makes sense. We can trade the Australian dollar, US dollar currency pair like a next pair if we know, okay, the market indicators that move this currency pair. If you understand, it's not all about knowing, but we want to understand and implement, okay, a viable trading strategy. Okay, it makes sense. So talking about the third element that will influence, or market indicator that will influence the Australian dollar, US dollar currency pair, we are talking about what? Okay, the China economy. So if the China economy is doing very well, pay attention. Okay, if the Chinese economy is doing very well, all right, the Australian dollar, US dollar currency pair will benefit from it. If the China economy is doing poorly, this currency pair is likely to go down. You need to understand that. Why? Because, okay, the two economy, Chinese economy and the Australian economy, are interdependent, okay? All right? The Chinese will import a lot of goods from the Australia to their country, all right? When the economy is doing very well in, okay, in China, okay, there are more goods, okay, we have, okay, a trade surplus in Australia. So the Australian economy is dependent indirectly and indirectly on the Chinese economy. So when the Chinese economy is booming, as we have seen, okay, from 2008 to 2011, the Chinese economy is doing very well, okay. The Australian economy also was benefiting from the Chinese economy. Now that the Chinese economy is slowing down, as we have seen this week, talking about today, is what? Okay, now it's midnight in London because late now. It's now the 10th of, we started this video around 23rd of, okay, talking about the time in London. It was on the 9th of, okay, July 2015. Now we passed midnight, it's now 10 of, okay, July 2015. You can see that, okay, as the economy yesterday, in fact, on the 8th of July 2015, the Chinese economy was going down big time. They have stopped investors to sell, okay, big chunk of the, okay, the Shanghai index, okay. So the economy in China is not as strong as it was before. It's struggling a little bit, as we talked about it before. I will come back to that in another video for traders so we may understand what we are discussing here. But the point I want to make is that because the Chinese economy is not doing so well, it's affecting directly and indirectly the Australian economy. So this is another market indicator that is influencing this currency pair. So what do I mean by that? So when we are trading this currency pair, and we see, for instance, we go to Forex Factory, and we check the economy news, we see some major economy news concerning China coming up, though this pair has, okay, looking at this, we are comparing the economy of Australia to the economy of the United States. So looking at it like this, we say, okay, this has nothing to do with the China economy, but it has a lot to do with the Chinese economy. It's about, okay, trade partner. There are two trade partners, okay? So though looking at it, theoretically speaking, it has nothing to do with this pair. One must pay attention to economy news from China because this economy news will affect, okay, the Australian dollar, US dollar. So late in the night, sometimes you may see some major economy news that are released in China, and you will be trading, for instance, using your technical trading tool, trading the Australian dollar, US dollar currency pair, or you may have maybe many trades, okay, open in this pair. And then the next day you wake up, okay, you see something that's okay, all right? You didn't expect, all right? You see now? But if you understand that the Chinese economy is directly and indirectly linked to the Australian economy, and you are trading this Australian dollar, US dollar currency pair, you will be, okay, cautious. So if you have too many trades open on the Australian dollar, US dollar currency pair, you will close them down or you reduce your exposure, all right? You control your risk, and you will have maybe one trade open and you will manage it carefully because you don't know the outcome of the major economy that is coming from the China economy. All right, it makes sense? It makes sense? All right, so very, very important. The US Federal Reserve decision will influence the decisions that are made by the Australian Central Bank. All right, so the number one factor is the US Federal Reserve decision. We influence this currency pair. Very, very powerful. So before we check out, okay, the decisions that are made by the Australian Central Bank, we must first check, okay, the Federal Reserve, okay? If the Federal Reserve is not doing anything, then we must concentrate on the Australian Central Bank, the Bank of Australia, okay? It makes sense? We must also understand that this currency pair is positively correlated to gold, all right, which I explained to you already. I will not dwell on it, okay? It's also positively correlated to the euro-dollar currency pair. The fourth element, that is, or the fourth, okay, market indicator that can move the Australian US dollar currency pair is the Chinese economy, as I've already explained to you. It makes sense? It is also important. I need to mention another element to trade it, the capital flight. Or as I explained to you, it's already done because as I said to you, as the Federal Reserve from 2008 to 2011 was busy printing the dollar, devaluing the dollar, there was outflow of capital into the Australian economy because, okay, the interest rate was higher in Australia compared to the interest rate in the United States. The investor, the wealth managers transfer funds into the Australian economy also, all right, looking for better returns. Now, this is about capital flight. Capital flight will influence the Australia. So we see now as the Federal Reserve has changed their policy in 2012, all right, they have now stopped printing the dollar. They have stopped devaluing the dollar. They were telling the market now, we are now ready to put up interest rate. As soon as the Federal Reserve is speaking, the market will respond. They say, soon, if the conditions align, we will put up interest rate. As soon as he said that, all the capital that went away from the United States start returning back home. You see? So the dollar was appreciating against the Australian dollar. So a change of policy, United States, a recovery taking place. Now the Australian dollar, US dollar currency pair is going down. This is about the capital flight. As I explained to you, the global economy is represented by the US Federal Reserve, and what is happening in the United States, the economy in the United States, job creation, unemployment rate will influence, what we call the global economy. So if the US is in recession, we say that the global economy is in recession. What will happen? Okay? The commodity market will go up. The commodity market is going to go up. The Australian dollar, US dollar will go up. Why? Because it's a commodity currency pair. It depends on commodity. So if gold is going up, okay, this pair is likely to go up. But we need to understand the importance of each factor, each market indicator. The decision that are made by the Federal Reserve is the number one factor that we must watch. Is superior to any other market indicator, all right? Apart from the decision that are made by the decision that I need to say to traders, the decision that are made by the U.S. Federal Reserve will create the environment. So what is happening in the United States will force the central bank, the U.S. Federal Reserve, to make a decision. So we have a recession taking place from 2007. Here you see all the way to 2011 that has forced the U.S. Federal Reserve to devalue the dollar. Okay, the devaluation has forced. Okay, now the wealth managers, okay, the money managers to transfer funds out of the United States into other parts of the world, including the Australian dollar. As the Federal Reserve was busy devaluing the US dollar, the central bank in Australia has decided to put up interest rates because they can start devaluing their currency because there is money waiting to go somewhere else. So the best policy to make in Australia is to put up interest rates to attract all the funds that are coming out of the United States back to Australia. In 2012, the Federal Reserve has stopped printing the dollar, stopped devaluing the dollar, telling the market that we are now ready to put up interest rates. The investor, the money managers responded against now taking out their money out of other parts of the world back to United States. Now, as I explained to you, when you hear the word recession, the first thing that should come into your mind is protection of purchasing power. So, talking about purchasing power of our money in our pocket, in our bank, we want to buy real asset, the number one commodity or the number one asset that the money manager will buy is gold. So in recession, that's why in recession, the Australian dollar, US dollar currency pair will go up. This is the long-term trend. As a day trader or swing trader, we must take advantage of those bullish trade setup, giving priority to bullish trade setup. And when we are trading a sell signal during this period, we are taking a contra trend. So we must control the risk carefully. Now the policy has changed. The Federal Reserve is now ready to put up interest rate. Funds are returned back to the United States. This is a change of policy here. The gold starts going down. Okay, gold is going down. The Australian dollar, US dollar currency pair is positively correlated to gold. It's likely to go down. When we receive any signal trading the Australian dollar, US dollar currency pair, it makes sense to check the euro dollar currency pair because it's the leading currency pair, and these two pairs are likely to go up together. These are the few things that we must know if we are trading the Australian dollar, US dollar currency pair. Number one, okay, US Federal Reserve decision. Number two, that decision will influence the Australian Central Bank. All right. Third, gold will influence this currency pair. Very, very important. All right. We need to understand that. And also the euro-dollar currency pair move in the same direction, positively correlated to the Australian dollar, US dollar currency pair. The Australian economy is directly or indirectly connected or linked to the Chinese economy. One must always pay attention to the economy news or the economy in China. If the economy in China is doing very well, the Australian dollar will benefit from it. Therefore, this currency pair will go up. If the Chinese economy is doing poorly, all right, this currency, the economy of Australia will, suffer from it. Therefore, the Australian dollar will start going down in comparison to the US dollar. Therefore, this pair is likely to go down if the Chinese economy is in recession. It makes sense? It is also important. One must understand that when we are talking about the US economy or the US Federal Reserve, we are talking about the global economy. All right? Do not forget, the capital flight, which is also the consequence of the general global market environment. It makes sense? It is also powerful. This is the end of this video about, Forex trader, Australian US dollar currency pair trading discussion. In this video, we were discussing all one needs to know and understand to trade the Australian US dollar currency pair like an expert or a professional trader. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. All right? If you love it, please share it on Google+, on Twitter, and also on Facebook. If you love what we are doing here, feel free to subscribe to our channel. Until the next time, enjoy yourself and be very happy. We are the Forex traders talking about the Australian US dollar currency pair trading discussion. Speak to you soon.